Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for September 20th, 2007. Well, quite a day it was today. We saw the market's overall trend slightly lower in a consolidation attempt right before Options X tomorrow, which occurs on Friday, the third Friday of every month. Now, what we saw today was the Dow down 48 and the NASDAQ down 12, and the S&P down about 10 points on the day. Overall, we had some interesting movement here today because the dollar really has been collapsing over the last few days. Ever since the Federal Reserve cut the key interest rates 50 basis points, we saw the U.S. dollar decline in value. And as you guys know, if you've been watching these videos, you know that that's directly in relation to commodities prices. And we've been seeing commodities prices shoot up dramatically over the last few days. We saw oil up another $1.39 today, closing at over $83 a barrel. We saw gold up $10 today. We saw the yen and the euro gaining traction against the dollar and getting more expensive. And if things weren't crazy enough, for the first time in over 30 years, the Canadian currency, the Canadian dollar, is equal to the United States dollar. Alright? And that, for those of you that have been around for a while, know that that is unreal. It is out of control. And this is what we were cautioning on the Fed doing some rate cuts here, folks. Oil could easily, if they continue to cut rates, oil's going right to 100. Gold's going right to 1,000. The United States currency is going to drop more and more to the point where it's pretty much a minuscule amount of value compared to where it is now. And again, this is if the Federal Reserve continues to cut interest rates. We happen to think that they might do one more cut of 25 basis points, but probably not too much more. Alright folks, what you're looking at here is the ES chart during the day. And this is the intraday 10-minute chart, and you guys can see it was an interesting day today. There was not a lot of volume out there today, folks, and we basically just saw a gentle trade kind of in the middle portion. After gapping down slightly, we traded up a little bit, getting to the positive side right over here in the markets, and then overall we just kind of slowly dribbled down here, and the selling kind of accentuated itself, got a little quicker into the early afternoon after lunch. Then we bounced and we kind of settled down right here. So overall, yes, it was a down day, but for most of all, you got to kind of look at it as a consolidation day because we've had this humongous move up over the last 2 days. You had the NASDAQ going up, upwards of 80 points in the last 2 days. And you need, anytime you have a move like that, always expect a little retracement. It's called retracement as it kind of retraces some of that move. And we'll have to watch. On the NASDAQ and on the ES and in the S&P cash, and this is the NASDAQ chart, and we're going to look at the daily. And you can see the keys right here, guys. It's very important to watch for gap fills, and that's what we got today here. As you can see that the top here, the gap here was filled between this point, and this is where we touched and actually closed that gap right here on the chart. So that's a key technical indicator as well to see that we closed that gap. It can also set us up for another move higher. However, on this daily chart, you guys see how far away we are from the 20 moving average and the 50. At some point, we need to retouch that 20 moving average. So at some point in the near future, I do expect a continued retracement, maybe a little bit down, just a little bit more like this. Alright? Now this is considering that everything stays pat. If the dollar continues to collapse, or oil continues to climb towards $90 or $100 a barrel, or the gold price continues to climb towards 1,000, we could see some dramatic selling in the market as people get a little scared. Because let's face it, guys, there will be a trigger price where this market gets extremely scared over oil. It originally was back when it was $70. That was the first trigger years ago with Katrina and the hurricanes. Now it's upwards of probably $90 to $100 where the market will seriously get scared about causing a recession and inflation. And by the way, guys, cutting of rates is another form of inflation because as these commodity prices get out of control, it somehow filters back into everything we buy as Americans every day. Alright, so be aware of that. Now, one thing I do want to point out here, guys, I want everyone to follow this trend here, okay? See this trend forming here? You have a hit here of the trend, a bounce up, hit here of this trend, bounce up, hit here of the trend, bounce up. Now we come down and hit this trend, and we break this trend to the downside, we could be in some trouble. So watch, that's the new trend to watch for now, okay, folks? So until we break that trend, you can't consider us a new fall, alright? However, on the upside, really, until we break out of the highs here on the NASDAQ, you can't look at it for a positive move higher here. So we're right now in between this trend, and I want to show you guys here. We're basically right in between, and we could go either way. We're right here in the middle, and you can see we're evenly spaced here. Okay? So again, look for that. Look for some sideways moves. Again, options X is tomorrow. Notoriously, options X is always an up week, and this week did not disappoint, obviously. Last time, it was the gigantic move on that retrace on August 16th where we bounced up huge after being down huge, and then the Fed lowered the discount rate on Friday to kick all the puts out of the money right there. Okay. Now, the other thing I want to talk about a little bit here is the intraday NASDAQ, and you can just kind of see how it kind of lollygagged right here, trending down all day. And you can see here, again, looking at trend lines, look at this trend line. See how every time we kind of touched that trend line, we sold off. Touched the trend line, sold off. Touched it, sold off. And at the end, we touched it one more time here and sold off. And you guys know I'm a big fan of trend lines. Trend lines, moving averages, volume patterns, they're all so key. And understanding patterns of candlesticks, too. Understanding dojis, hanging man, and all that stuff. And by the way, candlestick patterns, everything you want to know about candlesticks and how to read charts will be at the Apprentice webinar that we're going to give. So go to our website at inthemoneystocks.com, and sign us up for the Apprentice webinar. We are going to go in-depth in candlestick charts, in stochastics, every technical indicator that you're curious about, we will cover it. You will go out of that seminar or that webinar, which again, webinars are taken in front of your computer, so you don't have to leave your house, and we talk over a microphone and do slides and talk about it just like a seminar, but you're at home. You will leave that seminar knowing so much about how to read candlestick patterns and every other aspect of technical analysis. So I encourage you to really sign up for that. It is a phenomenal value. And everyone that's signed up so far is excited, and we only have about 10 more spots for each seminar, so hurry up and sign up. Okay, the other thing I want to touch on, guys, and again, here we're looking at the NASDAQ chart, and the other thing I want to bring up here is this pattern right here. All right? Notice right here how we also have a little bit of a topping pattern here where we keep on hitting up and bouncing down. So again, what you can look for, believe it or not, if we're able to somehow close above this line, you could look for a new touch of this double top right here. At the double top, first hit of the double top, you probably want to go for a little short as you get a little push down, but then again, chances are eventually we will break out to the upside. Again, so it's all a matter of which way we go here. We're kind of in no man's land, and that's important to understand. We're not just saying it's a short or a long, although we do say that it needs to come back at some point as the 20 rises like this, 20 moving average, once the market's above it, rises. Eventually we need to come down at some point and touch that moving average. So maybe it'll be over here. We don't really know. We'll have to kind of watch the charts. Again, notice the stochastics down here are getting kind of toppy again. All right, they have pulled back a little from that move up, but we'll have to watch. Now that options expiration is going to be out of the way tomorrow, we're going to get back to normal trading on Monday and really be able to evaluate this market much, much clearer. Options expiration is a big boys game, guys, and they will push the market whichever way they see fit, as to put them, whichever side has more puts or calls on it, they're going to push it the opposite way to take the most people's money they can. Just the way it is, folks. Okay, the other thing I want to touch on is some day trading stuff, and this is exciting for me because I talked about this yesterday, how basically the day trading market was getting finally back to normal and phenomenal. And when I say phenomenal, I mean holy cow phenomenal. I want to show you some charts here, guys. Alright? These are moves. Yesterday and the day before, I said, guys, watch the China plays. On this market, when they cut rates, it signals that small caps start to run again and mid caps start to run. And I said this yesterday. And I also said that 2 days ago, and I talked about this in the chat room especially, how now that rates are lower, this is going to try and help consumer spending because consumers are hopefully going to come back, which in turn helps the small caps as well, because those are the ones that need the spending. They need the lower rates. In turn, Asian stocks, specifically like China stocks, they run on consumer spending. We buy all our goods from overseas, so a lowering of rates, which can help consumer spending, will be looked at very beneficially. And today, what happened? Look at this. This is the daily chart, guys. Daily. This is not the intraday. This is daily. This stock is eFutures EFUT. Moved from $12 to $18 in 1 day. This was all called in the chat room, guys, by the way. I talked about all these stocks. CPSL, China Precision Steel. This is a 1 day move here. From $3.50 up as high as $4.30. That's a $3 stock all the way up to $4.30. Almost $1 gain on the day, guys. This just continued to happen, alright, folks? Tons of stocks out there. All these Chinese stocks started to run today, as did some other small caps. Now, this was called in the chat room, and we captured some nice profits on some of these. And we continue to have a nice watch list of stocks we think are going to be moving over the next couple days. So I encourage you guys. We basically are alerting the chat room based on level 2 when we see the level 2s, the chart setups, and volume. This is what you need to know. Alright, so come in the chat room, learn this stuff, and do it for yourself. All right, big money here, guys. Look at this chart here. It took off. Took off here, consolidate, took off again, consolidated down a little, and took off into the close. And that EFUT chart, and there were others, I'm just showing you two here. Look at this chart during the day, guys. There's just never a real pullback. Continually a higher move here. Just phenomenal. And I encourage everyone, come join this chat room. It's very cheap. You know, what I pulled in this market today was the equivalent of many months of trading in the day trading chat room to pay the subscription fee. Many months just in one day. And you guys can all, we talk about this openly, we talk about our psychology of the markets, we talk about how we do this. Well, come learn it for yourselves. In addition, the swing trade alerts, guys, we got triggered on one swing trade alert today, and we were close to the other one. Great positions. These are going to be big money payers, we think, and I encourage everyone to come join the swing trade alerts also. In addition, guys, just have a wonderful evening. Get ready for tomorrow. Some more action is promised in the coming weeks in this market. It's going to be a fun market to trade. We don't know whether it's going up or down right now. We're in that limbo stage, but we'll know better on Monday when Options X is out of the way. Have a wonderful day, guys. We'll talk to you tomorrow.